So I've been relegated to making notes in my book here. I've got pages and pages of notes we're going to go through. It's going to be a big video. It's going to be a good video. Please ignore all the background noise. There's a lot of it. So let's get through this. There's going to be a ton here, and it's a good one too. And I'm going to tell you a lot about real estate, rental prices, and also about the values of homes that are for sale and the inventory, all that kind of stuff. But first, I got to go through a whole bunch of punch notes. The S&P 500 had its worst start to a year in 50 years. And some people are shocked by that. Some people are so surprised. It sounds about right, given how far over to one side of the raft everybody ran, how delusional the market is. Nothing we say here is intended as personalized trading advice for you. On behalf of myself and the entire Peter Leeds team, we love you guys. We do this for you. We do this because of you. Morgan Stanley cut their outlook or their target price on Carnival Cruise Lines. I don't know what took them so long to get to this point, but they finally caught up. But here's what it says. Here's what I see it through the eyes of Peter Leeds. What they're saying is they were wrong before. They told everyone where they thought the shares were going to go, and they came along and said, no, we think the shares are only going to be going towards about half of what we thought. So they didn't know what they're talking about before, and we're supposed to believe them now. They're still not seeing the reality of how bad things are going to get, but hey, it's Morgan Stanley. They're a big name. We might as well believe them. I told you about that cryptocurrency liquidation in one of the former videos. I don't know if it was the last one or one before, but then there was another one, and I didn't get to it. But then this is the latest one. Crypto lender vault pauses withdrawals, trading, and deposits. So basically every function. And what they say is that they're exploring their strategic options. That's another way, if you want to put it through the Peter Leeds converter or the Peter Leeds translator, that's another way of saying we are crashing and we need to try and land this plane rather than slam into the ground. So they're going to take some hits. That's when you start liquidating things for less than they're worth. And on the books, they're worth a lot more. And all of a sudden, the underlying company or organization takes a big write-down from that kind of thing. And I'll quote what they said, that they're facing, quote, financial challenges due to the volatile market conditions. It's not that it's volatile, it's that it came down so much. And a lot of cryptocurrency businesses, the individual businesses are based on the fact that cryptocurrencies would continue to be widely used, would continue to increase in price, some of them. And they call it volatility, they blame volatility, but what happened was Bitcoin, for example, and then just about every other cryptocurrency with it, dropped about 50% in what, a few months, 3 months? That's not volatility, that's a completely negative trend. And I always tell you, it's not about where it ends up, it's about the speed at which it goes to that point. The angle of the slope, just with velocity of money, just with the value of your home, just like with stocks, just like cryptocurrencies, the speed at which it falls is a lot more significant than the actual final destination. Now I'm going to break out a few rental price changes, and then we'll roll into real estate, and then I want to get into some really important good stuff. Not that this isn't important and good, but it gets even better. Just hang with me for a little bit. I'll try and go quickly. Get to the end of this video. There's a whole bunch of cool stuff I want to tell you. This is from a report from Zumper, and they're talking about national rent levels, and there's 5 cities they talked about. And in terms of month over month for a 1-bedroom apartment, rental prices have gone up by 0.5%. Month over month, a 2-bedroom apartment has declined in price by 2.9%, the rental prices. And they go on to talk about Tallahassee, year over year up 7.5%, but month over month, rental prices in Tallahassee fell 6.5%. Anchorage, Alaska, year over year plus 8.2%, month over month, negative 6.2%. You see, year over year is a wider view, or you're looking at it from a further distance, but then you get in closer month over month and you start to see what is the current trend, the more recent trend. So on a year over year basis, yeah, just about every rental price is higher for now, but month over month they're starting to turn around and come down. And you'll see that first, and eventually then year over year will also be negative. And right now you've got negative month over month rental prices for urban Honolulu. That's a month over month decline of 6.1%. San Diego, month over month 6.1%, it also fell. But check out this, San Diego was year over year, 20.8% in rental prices year over year. That's a huge jump, but then last month they dropped 6.1%. And last one here, Syracuse, New York, saw their month over month rental prices declining by 6.1%. And then we got an inverted yield curve. From the 10 and 2-year bonds, the longer term bond is paying less than the shorter term bonds. And an inverted yield curve precedes every single recession ever, but sometimes it inverts and there's no recession subsequently. It doesn't matter. I'm telling you guys that there will be a recession. I told you this ages ago. It's going to be a big one and it's unavoidable. And whether or not we're in one right now, I did tell you that there would be a recession in 2022. You're seeing the Bitcoin consolidation keep on rolling, stretching out further. Call it between 18,000 and 22,000 per Bitcoin. That's range bound. They're in that range. The longer it stays in that range, when it breaks out, whether to the upside or the downside, it will be more pronounced. If it stays in that range for months and months and then it breaks out, that's going to be an incredible move in either direction. I don't know where Bitcoin prices are going to go. I know where the cryptocurrency industry is going to go. So look for Bitcoin to break out of that range in a meaningful way in either direction. And I'm not calling a price point for Bitcoin at this point. I'm just saying that there'll be a lot of washout, a lot of disappearances of altcoins, and I've been harping on that since day one. But the markets were mixed yesterday, a little bit up, a little bit of down. But if you look at when I planned this video, was a day ago, so when I was looking at the European markets, the DAX was down 2.9% in a day. The FTSE was down 2.86% in a day. And also down 2.68% was the CAC. This is something that needs to happen. There's a lot of overreach in Europe, and they have to come back to reality there too. And there's a lot of countries that are on the edge of recession. Some of them are starting to get into recession now. It'll play out there. The whole global economy is in for a decline in activity. That's why I'm saying that oil prices are not going to go where everybody else is telling you they're going to go, just because they've gone up a lot. And now you're starting to see articles where it says, okay, maybe $50 oil is coming up. Lower price points, because people are realizing that there's a lot of things that can bring the price of oil down. The most major one of all of those is going to be the slowdown of the entire economy. There'll be less demands on oil worldwide. So you've got Biden releasing some of the strategic petroleum reserves. That's not what they're for, and it's not going to help. Or, cutting down on some of the fuel taxes, that sort of stuff. It's all temporary, which means it's all artificial, which means it's temporary. It's not going to be a lasting thing. The reason that oil prices will come down is there will be less demand as the global economy keeps falling off the rails. If we get into a recession, forget about it. It's going to be pronounced. You're going to notice lower oil prices, not higher oil prices like a lot of people are going on about. But that's just my opinion. I've been wrong plenty of times. Don't get mad at me if I'm wrong. I believe that it's going to play it exactly like I told you about, and that's why I want you to get to the end of the video. I'm going to say a lot of stuff about that. But first, let's get into actual home values. Because the recession coming in and house prices were roaring before, and I kept telling you the inventory will increase not based on building new homes. It'll increase because there'll be more homes being sold. People moving out of houses and into apartments. People who are looking to buy will not buy because the prices are so crazy, unaffordable. But when I did these notes, oil was down $8.75 per barrel at that point. So at one point it was down 10% on the day, but it ended down 8% on the day. And the one that everybody's got wrong, including myself, has been gold. Precious metals are getting hammered. This is a great time, in my opinion, to load up on a lot of these gold mining stocks that are completely undervalued right now. The good ones, the producing gold mining companies. You know I'm right when I say gold will have its day, and you know I'm right when I say just wait, but I was wrong in terms of the time frame of how long it would take for gold to actually wake up. But that will be the last part of the curtain being pulled back, people returning to reality. Is when they recognize the value and scarcity of precious metals. When I made these notes, gold was down $32 an ounce on the day. But I always tell you with gold, don't even worry about it. It's not going away. The lower it gets, the more drive there is to push the prices higher. The more demand will increase and expand, especially now with so many moving pieces in a lot of countries like Russia and China loading up on gold, trying to make their own reserve currency. Now let's talk about real estate. I've long told you to be cautious with real estate. Home prices are going to start declining. You're starting to see that, and I want to get into that right now. This is from Fortune magazine. Some markets could see their home values decline 15 to 20% in a recession. Oh, really? Thank you, Fortune magazine. Market Watch is talking about 25% of homes that are for sale are cutting their asking prices or have cut their asking prices. And that leads me into an article from CNN which talks about 5 things that are showing you that real estate values, real estate prices are starting to cool. The first of which is that the inventory has increased 13% year over year. I told you the inventory would increase. It's not about building new homes. It will naturally move that way. There will be more homes for sale at these prices until it crests and starts coming down significantly. And they also say there's price cuts on 10% of homes, but the other Market Watch said it was 25%. So you decide who you want to believe. But either way, it's all pointing in the same direction. And all you need to know is the direction and how fast it's getting there, not the actual destination, the speed at which it takes to drop significantly in value. The faster that is, the worse it's going to be, and the more it's going to be a domino effect, which then affects things more quickly, more significantly. That's how it's going to play out. They go on also in the CNN article to talk about layoffs. Redfin's talking about getting rid of 8% of their workforce. Compass getting rid of 10%. These are some of the real estate companies, real estate financing and banking companies. And that's what I would say if I put it through the Peter Leeds translator, that I would say so far. There's going to be a lot more layoffs. Not just because lowering prices, but also because when the recession comes to town, prices will lower, but people will be less active anyway. All of that's going to add up together and push the employment levels of some of these real estate companies down. Meanwhile, mortgage applications are down 16% year over year, with refinancing down 70%. Why is that? Because interest rates are going higher, so why refinance? It'd make more sense to refinance when the interest rates are declining, because then you can get more house for less payments. But it's going the other way. There's going to be increases in interest rates. There's going to be a lot more delinquencies and defaults on people not being able to pay for their homes. They'll be underwater on their homes. And meanwhile, the last thing the CNN article talks about of their 5 points is that there's fewer people looking for a home. Compared to last year, it's 14% lower. And so now I want to get to the really important part of this video. And again, it was all important, but I want to ask you guys, are you starting to get worried? Because I know I am. I've been talking about a lot of stuff for a while now, seeing it coming. It's happening now, playing out like I told you. Is it so ridiculous to think that we can enter the greatest depression we've ever seen and be in that situation for over 10 years? Is that so crazy? What's so amazing about us now that we're going to be able to avoid something that will happen again and again throughout time? I was talking about real estate prices coming down, and now they are. I was talking about everything coming down together. The one I got wrong was precious metals, but also there's cryptocurrencies coming down, the stock market coming down towards fair valuations. There's a delusional curtain being pulled back, and it's not all the way back yet. This is a bunch of people running to one side of the raft and being surprised when they start falling off or stepping in the water. There's a lot of risk here right now, and you should be worried. I'm getting worried. It's not good for me, even if I'm right. People always say, oh, I don't want to be right. It's a bad thing, but that's so true in my case. If I'm right, it's going to be bad for me too, okay? I don't want to be saying this. I don't want to be seeing this or believing it. And I make a lot more money when I'm more optimistic. And again, I'll say something about that too. This doesn't mean you should be scared out of the market. It means you should be scared of the wrong parts of the market, which I've been telling you about with the blue chip stocks. Get out of all of this stuff for a while now and get into stuff that's going to be lasting. The recession is either here now or it'll be here this year, and it's going to have a big effect on a lot of things, including employment levels, including velocity of money, including stock market values, including cryptocurrency values, including bond values. Even bonds are taking a hit 40 years of a bull market is reversed now. It's all coming down together like I told you that I was worried about that it would. This is a time where if you have a few $100s, you're going to want to do something to try and make it into a few thousands. That's what we specialize in, looking at low-priced, high-quality stocks on the peterleeds.com newsletter. I hope you guys are finding these videos helpful. This will be the last one I'll be doing from New York because I'm getting on a plane tomorrow-ish, and then I'm out of here for a while. So hopefully you guys found it beneficial. Hopefully if you believe what I'm saying and agree with what I'm saying, you'll share it with somebody you know that also would affect the decisions they make. And as always, you guys know we love you, we do it for you, and we do it because of you.